Should I rent or buy is one of the fundamental questions that people ask when they're thinking about buying a home and getting a mortgage. There's no single answer to this question, and the best way to approach it is to understand the pros and cons of each option so you can make a decision that best meets your personal and financial goals. I'm going to walk through the positives and negatives of buying and renting, and then provide an example that demonstrates the financial trade-offs between the two. Let's talk about renting first. There are several positives to renting. Renting requires a limited financial commitment compared to buying a home. You also do not need to make a down payment. You have no mortgage to pay back, which can take up to 30 years. Most leases are a year or less, so it's a shorter time commitment and you have more financial flexibility. You don't have to worry about changes in property value. There's a smaller risk of messing up your credit, plus you're not responsible for maintenance and repairs for your home. There are also several negatives to renting. You have no opportunity to build equity in your home. You do not benefit if the property value increases. You miss out on the mortgage interest tax deduction benefit. According to the federal tax code, mortgage interest and property tax expenses are deductible against a homeowner's gross income. The lower your reported gross income, the less tax you pay. Just to be clear, your mortgage interest expenses are not directly deducted from taxes you owe on a dollar-for-dollar basis, but rather reduce the gross income figure that is used to determine the amount of federal tax that you owe. Another con of renting are potential rent increases as compared to a fixed-rate mortgage payment. You also have to deal with landlords, which can be no fun. Plus, you may have restrictions on decorating or changing the property. Finally, there's the risk that you may be evicted and need to find another place to live. Now, let's go through the pros and cons of buying. Let's discuss the pros first. First of all, we have pride of ownership. Some people just get a good feeling from owning their home. There's also the opportunity to build equity and benefit from an increase in property value. You potentially could have a fixed-rate mortgage payment for 30 years, so you don't have to worry about future rent increases. Plus, you benefit from the mortgage interest tax deduction. You don't have to deal with landlords, so you can decorate the property as you wish. And finally, you can pay off your mortgage and start paying yourself. But there are also several negatives to buying, including buying a home typically requires a down payment, which is usually a significant amount of money. Homeownership requires long-term financial commitment. The most common length of a mortgage is 30 years. You have the potential loss of your down payment or equity in your home in the event of foreclosure or decline in property value. Plus, you are required to pay costs not associated with renting, such as property tax, homeowners insurance, and potentially homeowners association fees and other housing expenses. Finally, you are responsible for repairs or maintenance of your home, which can add up and cost a lot of money. Now that we have reviewed the pros and cons of renting versus buying, let's walk through an example that demonstrates how these pros and cons could potentially play out financially. First, let's start with our rent payment, and say our monthly rent is $1,800. And now, let's compare that to buying a home. If we assume a 4% interest rate, we could afford a $380,000 mortgage and make a monthly mortgage payment of $1,820. So basically the same amount as our rent. But remember, when you buy a home, you are also responsible for paying other housing expenses such as property tax and insurance. In this case, let's say our property tax and insurance are $480 a month. Property taxes and insurance vary by county and property, but $480 a month is a good estimate if you're buying a home with a $380,000 mortgage. So if we compare our rent payment to our total housing expense, which is our mortgage payment plus property tax and insurance, we spend $500 a month more by buying than renting. But we also need to factor in the mortgage interest expense income tax deduction, which has a positive financial impact. Given our loan amount and interest, and if you make some assumptions about tax rate, our monthly tax benefit is approximately $330. It's important to highlight that you do not receive money directly from the federal government as the result of the tax benefit. So it's not as if you receive a check from Uncle Sam every month, but you do pay less in federal taxes, which offsets your total monthly housing expense. So if you factor in the tax benefit, we only spend $170 a month or $2,040 a year more by buying than renting. But that was just looking at year one of our mortgage. It's important to understand how the comparison between renting and buying changes over time. Let's look 10 years in the future, starting with a rent payment. Most rent payments increase a little every year, and if our rent increased 3% a year, our payment in year 10 would be $2,350, so an increase of $550 compared to our rent in year one. Let's compare that to what buying a home looks like in year 10. Our mortgage payment remains the same because we have a fixed rate mortgage. So in this example, in year 10, we save $530 a month by buying a home as compared to renting, but we still pay property taxes and insurance of $480 a month, and if you factor in that expense, we only save $50 by buying as compared to renting. But we also have our interest tax deduction benefit, which has decreased to $290 a month. Our tax benefit has decreased because with a fixed rate mortgage, although your payment never changes, you pay less interest expense over the life of the mortgage, so your tax benefit gradually declines. If we add in the tax benefit, we save $340 a month or $4,080 a year by buying a home as compared to renting. I think this example does a good job of outlining the financial differences between renting and buying, but it's only one example. If we changed our interest rate, our results would be different, or if we selected an adjustable rate mortgage instead of a fixed rate mortgage, it would change the comparison. Additionally, you may have to pay other housing expenses such as homeowners association or co-op fees or private mortgage insurance if you're not making a down payment of 20%, or the FHA mortgage insurance premium if you use the FHA mortgage program. So there are a lot of inputs to consider and literally hundreds of different scenarios you can evaluate. But the important point is to understand the pros and cons of each option and use a framework to assess the financial trade-offs so that you can determine whether renting or buying makes the most sense for you. It really comes down to the decision that you're comfortable with. We encourage you to check out our buy versus rent comparison calculator as well as our first-time homebuyers basics guide on freeandclear.com. Thank you for reviewing Should I Rent or Buy with freeandclear.com. Freeandclear.com.